The Wyckoff events in the distribution phase detail a structured series of market events that signal the transition from an uptrend into a downtrend. Through these events, large investors systematically distribute their shares at elevated prices to the public, anticipating a future markdown. Here is a formal narration of each event in this process. The sequence begins with preliminary supply, PSY, where large professional interests initiate significant selling activity after a strong uptrend. This event is characterized by expanding volume and widening price spread, signaling the potential end of the uptrend as supply begins to overtake demand. Following PSY, the buying climax, BC, occurs, marked by a surge in public buying at the peak of demand. During this climax, high volume and broad price spreads prevail, as professional interests absorb the public's intense buying. This event often coincides with positive news or a strong earnings report, allowing large investors to sell shares without driving down the price. After the BC, demand subsides, while heavy supply persists, leading to an automatic reaction, AR. This sell-off defines the lower boundary of the distribution trading range, TR, as price declines with diminished buying support. The price then revisits the BC level in a secondary test, ST, to assess the balance between supply and demand. For distribution to be confirmed, supply must exceed demand, and the price spread and volume should decrease as price approaches the BC resistance level. This ST may take the form of an upthrust, UT, where price briefly exceeds the BC level before reversing downward. After a UT, the price often moves toward the lower boundary of the TR. A sign of weakness, SOW, then becomes evident as the price declines to, or slightly below, the lower boundary of the TR. This event typically exhibits increased volume and spread, marking a shift in the stock's character, as supply now dominates demand. The AR and subsequent SOW indicate that selling pressure has intensified, and the uptrend is losing momentum. Following the SOW, a last point of supply, LPSY, occurs, where the price attempts a weak rally with a narrow spread and reduced volume. This feeble advance suggests that the market lacks demand and continues to face substantial supply. The LPSY represents the final wave of distribution by large operators, signaling exhaustion of demand before the markdown begins. In the latter stages of the TR, an upthrust after distribution, UTAD, may occur, mirroring the spring in accumulation. This event acts as a conclusive test of residual demand following a brief breakout above the TR resistance. The UTAD often traps remaining buyers before a swift reversal, indicating the final distribution phase before the downtrend initiates. Together, these events illustrate the shift in market dynamics as supply overtakes demand. Each event provides strategic insights into the gradual distribution of shares by large investors, signaling a transition from an uptrend to a downtrend. By the conclusion of this sequence, distribution is complete, and the stock is primed for a markdown, confirming the dominance of supply over demand.